My name is Andrew Stotts of the Valuation Master Class, and we have another presentation from one of our graduating students. This time, the presentation is on the company Tesla. Do you own Tesla? Have you thought about buying it, or have you thought about selling it? Well, this is going to give you some insight into what's going on at Tesla and asking the question, is it worth adding more, selling it, holding it? Let's see. I'm going to bring in our student. Uh, All right. How are you?
I'm good. How are you doing?
I am excellent. I'm excited to hear your presentation. I know you've worked hard on it, like so hard. All the students have been working so hard to get to this point.
Yeah.
So let me share the screen. Hold on. And then great. You see that? You
Yeah.
got your Tesla up. So I'm going to basically leave this screen and then you just take over. So I'm going to leave right now.
Thank you. Hello, everyone. My name is Ayushmita Ghoshal, and I initiate my coverage on Tesla with a sell recommendation based on target price of $192, implying a downside of 23% from the current stock price of $250. I derive my target price using the free cash flow to firm valuation using a WACC of 9.2 and a terminal growth rate of 4%. Bear with me as I take you through my research and my valuation to show you what Tesla has in store for all of us in the future. My highlights revolve around robo driving technology, which could be a real revenue game changer for Tesla. However, Tesla's futuristic focus is being challenged by more practical competition in the market. Risks include their high dependency on Elon Musk, but we'll touch upon that later. Let me give you a little background about the company. So, Tesla was founded in the year 2003 as a global leader in electric vehicles and clean energy. It dominates the EV market with around 60% of the global market share. It operates in over 30 countries with key markets in the US, China, and Europe. Tesla is a global world leader in autonomous driving technology. Tesla is driving the future with ambition and innovation, and here are my stories. The first story is about robo driving technology. So, Tesla is very clear. They want full self driving technology to be their central focus of their long term growth. By 2027, Tesla aims to have scaled their robotaxi network, creating a completely different revenue scheme for Tesla, where Tesla acts as an intermediary between the riders and the autonomous vehicle owners. Now, the revenue potential here is massive because the profit margins of these intermediary companies is very high. This, along with the rising demand for EVs, will significantly lead to a rise in both revenue and margins. My second story is CapEx surge will power growth in the long term. So, Tesla has been investing heavily to expand their gigafactories for better production of electric vehicles and batteries. In 2023, Tesla shifted from energy generation to energy storage, and this paid off massively with very high margins. They plan on continuing these investments to increase their storage capacities. Tesla also needs very high capex to fund their innovations in full self driving and robotaxis. Tesla already announced that they want to increase their capex to 10 billion by 2024, and I forecast the capex to rise to 16 billion by 2028. Now, these heavy investments will pressure the free cash flow in the near term, which will impact the short term valuation despite their long term growth potential. My third story is that Tesla's futuristic focus is being challenged by more practical competition. So once Tesla was an unchallenged dominator in the EV market, but not anymore. In Europe, for example, brands like Volkswagen and Hyundai have seen a strong growth in their EV segment, and Tesla's market share has dropped from 33 to 12% in 2023. Tesla still focuses on very futuristic designs, whereas people are looking for something more practical and user friendly. As a result, as Tesla keeps losing market shares to more traditional automakers, this could pose a significant threat to their sales and their margins. Let's look at their quarterly revenues. So in the first quarter of 2024, Tesla's revenue actually dropped. And although they were able to pull back in the second quarter of 2024, the majority of their sales did not come from cars. Gross profit margin and net profit margin have also fallen over the year. The constraints to growth for Tesla, there are two major constraints to growth. One is capital and the other one is margin. Any automobile company requires heavy amount of capex. Tesla requires even more capex to fund their softwares because obviously they work in the EV sector. So their capex needs will keep increasing year on year. The second is market. So Tesla is facing increasing competition from established brands like BYD, BMW, Mercedes, and even new entrants. As you can see in the second diagram, BYD sales actually surpassed Tesla sales in 2023. Another major constraint to growth is people. Tesla requires highly qualified talent in engineering, software development, and manufacturing, without whom their innovative ideas will just remain ideas. Let's look at the revenue structure of Tesla. So, Tesla gets 86% of their sales from automotive, 8% from services, which includes their softwares, their full self driving, and their supercharging stations, and 6% comes from energy storage and generation. Now let's benchmark Tesla against 1,800 non-financial companies in the US. It's actually ranked worst relative to its peers, basically because of their low valuation and risk. Now the valuation rank is low because of their exorbitantly high price to earnings ratios. For risk, even though Tesla has a negative net debt to equity, their high beta is bringing their risk to very low levels. Okay, let's look at the Porter 5 forces for Tesla. Tesla against their competition. So although the market is rapidly growing, the market isn't concentrated yet. And Tesla holds a significant lead in brand as well as technology, and it's one of the key disruptors in the industry. Let's look at Tesla's bargaining power against suppliers. So, Tesla's bargaining power against suppliers is actually low because Tesla depends on key materials like lithium and cobalt, whose supply is quite low. So, switching suppliers or even backward integration is not very feasible for Tesla. Let's look at Tesla's power against customers. Although it's falling, it's towards the positive side because although there are increasing number of alternatives, Tesla has a lead in brand value and range, and which is why customers cannot put too much pressure on Tesla to alter its prices. Let's look at Tesla's power against new entrants. Tesla holds great power against that because this industry is already very competitive. So, for new companies to come in and be able to make money, they need significant cost efficiencies, which a brand like Tesla has already mastered. Let's look at Tesla against the substitutes. So, it's falling over the years because as new competition is coming up, switching costs from Tesla to other companies is becoming easier, although Tesla does have a lead in tech and innovation. Let's look at their leadership. Their chairman is Robin Delholm and their president is Elon Musk. Now, the board composition of Tesla has only 8 members, which is quite lower than that of the US corporate averages and the auto industry averages. Let's look at the benchmarking of Tesla against 870 large consumer discretionary companies worldwide. As you can see, their profitability growth ranks 1 and 2, which is in the top 10 to 20%. This is basically driven by their excellent profitability. However, as you can see, there is room for growth. Their excellent profitability is charged by their high net margins and their consistently high net margins. Their growth has gone down because of the sudden fall in sales in 2023 and the last 12 months. Let's look at the ESG of Tesla. So, as you know, Tesla has been working on electric vehicles, solar production, and energy storage. So, it does have the ESG in mind, although it is facing criticism over environmental practices at its factories. Looking at social, they're actually doing quite well. They have a lot of anti bribery and anti corruption policies for their employees and managers. Their governance is actually below average, first of all, because of their board composition. And the second reason is that Elon Musk is one of those people who likes to stand up to the SSC, and the SSC likes to give him a hard time for it. Okay, let's quickly go through my valuation. So I have forecasted the revenue to double by 2028, basically because I believe that Tesla will start monetizing on their robo driving technology. Similarly, net profit margins will also rise over the years. Let's look at the balance sheet. Net fixed assets is going to rise because of their heavy capex requirements to fund their innovations. Let's look at the liabilities. Tesla has consistently had very low amount of debt, and as soon as they pick up debt, they feel like they have to pay it back. So I have reduced the debt with the sufficient cash that they have. Looking at the cash flow statement, I have assumed that the company will start paying dividend by 2026 as the company starts maturing. Looking at the ratios, let's look at the current ratio. The current ratio is rising over the years, which is a good sign for the company. The EBIT margin is also going up. The net debt to equity is negative. As I said, it's a very good sign for a company, and Tesla prefers to have very low amount of debt. Return on equity is actually decreasing over the years, but it's still higher than industry average of any automotive company. Looking at the free cash flow data, depreciation amortization will rise in line with the rise in capex. And as I said, although free cash flow is growing, the free cash flow growth is negative basically because of their high amount of capex needs. Let's look at the relative valuation. So Tesla trades at a high PB ratio of 11.5 or for 2024, which means that it is overvalued relative to US, Asia, and the world. Looking at the PE ratio, Tesla trades at a very high PE ratio of 77.5 in 2024 and 57 in 2025, although it's more than balanced by their high EPS growth rate of 35.4%. So let's look at my free cash flow valuation. So I've assumed a cost of equity of 9.6, a weighted average cost of capital of 9.2, and I've assumed a terminal growth rate of 4% to arrive at the value of 192 using the free cash flow to firm. This is my sensitivity analysis. Okay, as I was saying, the main risk of Tesla is the high dependency on Elon Musk. So, Elon Musk's vision, leadership, and his innovation drive Tesla's strategy. His public image and even his product development is very essential for the company's identity and success. So, if Musk was to reduce his involvement or even leave, that's probably the end of Tesla. Other risks are supply chain disruptions. So, Tesla relies heavily on materials like lithium. Their supply chain is very volatile, and so are the prices. So, any issues with them will slow their production. Second is the robotaxi failure. So, Tesla's future hinges on the success of robotaxi, and if there is any implementation fault, people will start questioning their high capex. Another one is regulatory risk of FSD. So, although Tesla has been trying to tell us about the potential benefits of full self driving, studies show that these are 10 times more dangerous than normal human drivers. So, many states are debating about banning this technology. Even if these are rolled out and a few accidents happen, it could send us 10, 12 years back where people were not ready for autonomous driving. The next one is market volatility. So, as you can see in the diagram, in just 6 months, look at how volatile the stock has been. So, Tesla stocks are very much driven by market sentiments and the financial positions. So, any negative news, any missed expectations, or even a random public comment by Musk leads to significant price swings. So, yes, that's my research, and I hope I've been able to convince you that Tesla has a bright future with a few shadows ahead. Thank you.
All right, excellent. Now, can you go to the WCB page?
Yeah.
Let's look at that. Okay, I just
Yes.
want to understand. So, what's really happened is revenue's really weak.
Right.
Okay.
So basically, they have been losing sales and they have been trying to bring price cuts, but that is not working and it's actually putting.
So, why are they losing sales? Are all the others losing sales, or are they losing to sales
Not
to
not
stronger?
not really, because I mean, it's basically people are trying. I mean, I understand that EV is coming up and people want to switch to something more sustainable, but it's like whatever innovation that Tesla is coming up. I can give you an example of the Cybertruck. People are not ready for the Cybertruck. I read an article where they said that the car washing areas does not have a provision for washing the Cybertruck. So
Hmm.
people are switching to more user friendly and more practical solutions like BYD or Mercedes. They're coming up with more practical solutions.
Okay, can you go to your story page?
Yeah.
I didn't really understand. You were saying the switch to power energy generation. Tesla shifted from energy generation to storage. Can you explain exactly what you mean by that?
Yeah, so Tesla was first they were focusing on generating energy, which has very low margins of like 4 to 5%. Then they shifted to leasing out their storage units to other companies, and that has more margins around 11 to 12%. And Tesla realized that that is much better than putting so much capex to generate energy and not getting enough margins. So they have switched from energy generation to energy storage.
And that's energy as in, I don't know, solar power that's
Yeah,
okay.
right.
Okay.
LNG and solar power.
Um, can you go back to your free cash flow to the firm slide?
Yeah. Yeah.
The one before this.
Oh, sorry.
Yeah. Um, so free cash flow to the firm was about 2 billion, then 4 billion for the last 2 years. And your forecast is almost 18 billion by 2028.
Mhm.
What is the core driver of that?
It's basically high revenues and high net margins.
Okay,
That is,
so
their sales will actually, I'm predicting that their sales will double by 2028.
and FSD is to what extent is FSD in yours or consensus forecast these days?
Oh, so people are actually very excited about it. On 10th October, which is just in a few days, Tesla is going to come up with a preview on how this entire FSD system is going to look. And people are actually very excited. The stock price has actually gone up by more than 25% just in the last month. So people are excited for it.
Okay, and we've got some questions that have come in. Let's see. Hold on. So Zishan says robo driving tech and capex surge could translate into good revenue growth in the future. Don't you think it would excite investors and boost the share price? Wouldn't you be more positive?
Yeah, yeah, I mean, it did boost the share price in the last month, but I feel like it's just the momentum investors trying to make a little money out of it. Because right now, the presentation is always going to be good because you can't make a presentation go bad. But I don't know how well they can implement this robo driving in the next 2 years, because I don't think people around the world are ready for it. Because when they came up with their semi-automatic cars, people were not ready. It took them time to adapt to it, and then people started using it. So I feel like it'll take 3 or 4 years for robo driving to become at least common for people.
Okay. And Yash says if you say the company's highly dependent on Elon Musk, shouldn't your valuation be higher just based on Elon Musk's innovative ideas that he comes up with every 3 to 4 years?
No, because I feel like just because Elon Musk came up with an idea 2 years ago does not mean he'll always come up with new ideas. He is as good as he is, he's also very easily distracted. And I feel like whenever there is some public consensus about something negative about Tesla, he comes up with a bold statement to distract people, and people are catching up to that. So
Hmm.
I think he's a neutral force. I don't think I should pay a premium just because of Elon Musk.
Okay. And what's interesting is that, I mean, your forecasts on the free cash flow of 17 billion, almost 18 billion is huge, right? Like that is a huge increase from where it's at now.
Hmm.
So I don't think you can be more positive,
Yeah,
and yet we still
it's
see
overvalued. Yeah.
that it's overvalued. My question is, what are people paying for? Why are people paying such a high price for the stock?
It's basically because it's just for a very small period of time that people are paying this high amount because they think that, oh, something new is coming up. So this Tesla is a very volatile stock. It's a lot on market sentiments. So as soon as the price, as soon as the sales goes down at the beginning of 2024, price fell to 140. And
Mm,
suddenly Elon Musk said that he's going to come up with rover driving, and the price shot up to 250. So it's really volatile, and you can't really depend on the market sentiments. If you go through valuation, I feel like it's highly valued today.
okay. So how does it feel to graduate from the Valuation Master Class?
Oh, it feels great. I did my bootcamp presentation. I feel like this is so much better. I've really improved.
Yeah, tell me about the transformation that you've gone through, through the whole Valuation Master Class.
Uh, I remember in the beginning when I started valuing the companies and then I kept on posting drafts. I was like, oh my God, I'm not good enough. But then in when I was valuing the last company and it got approved and like got approved in one go, and I was like, it gave me a lot of confidence. And plus it feels like an addiction, once you start valuing companies, you want to keep doing it and you want to know what is new. So it's a great experience.
Yeah. And how would you describe, let's go back to your presentation at the end of the boot camp versus the end of Valuation Masterclass Professional. What do you see as the differences of the way that you look at the company?
Uh, I feel I feel like I even though we spent 4 weeks doing research on my bootcamp company and I just spent a week doing Tesla, I feel like there is so much I know in just 1 week. So I think I've learned how to do better research and I know what to specify on and not go around and I don't know what to look. I really know where I need to put my focus and what are the drivers and what is going to be a problem. So then I feel like I have an entire system now.
And how long did it take you to write that Tesla to from zero to where it is today?
In less than a week.
It's incredible,
Thank
right?
you.
That's incredible.
The credit goes to you.
Thank you. And the next question I have is, what would you say is the transformation in your life that the last 12 weeks have brought you?
I feel like I'm more attentive, and I mean nowadays when I go to my Google News and I see the news about the company and I know, oh, this is how this might affect the company, or this is how it'll affect the future of the company. So I feel like I have been able to extract the detail from very redundant news. So I feel like I've learned that better, and I
Mm.
feel like I'll keep valuing companies because it's a great feeling, once you come out with, oh, this is the price.
Yeah, isn't it great to look at a company you never looked at before and then say, "I'm gonna figure this out."
Yeah.
Yeah. So, you got some nice comments. Alima says, "Excellent
Thank
presentation."
you.
Yeah,
Thank you.
and, yes. Yash says, "It does feel I feel empty. I don't have any valuations to do." So, anyways, well, I wanna say congratulations, you did a great job, and,
Thank
I
you.
will talk to you soon in the Slack group.
Yeah,
All right. See you.
great.
Yep.
Okay.
Bye.
Thank you.
Wow. Whoa, whoa. That was great, huh? On Tesla. So are you buying or are you selling? You saw her forecasts were pretty optimistic. She had everything in there, and yet it's still overvalued relative to that. That's really a great, demonstration right there of what valuation does when we go into detail in a company. It's also a great demonstration of the tools that we use in the valuation masterclass because once you start to learn frameworks and tools, you can come up with research pretty quickly. As she said, she did that in 1 week. So that is pretty awesome. If you want to build a competitive advantage in company valuation, well, then join us in the next Valuation Masterclass Bootcamp.